morning all. Vet from ITG Group, and today I'm going to cover real briefly a trend day versus a range day. And I'm going to start off with a trend day because NVIDIA was the one stock in our all our PVI volatility analysis that failed to remain in the volatility range this last week. And it did so because it ended Friday with a trend down day. So the chart on the left, we've got the levels, and I'll explain those as we go. We got other videos on those. But the previous day, the supply demand zone was here. It's we've got it highlighted. I've got it darkened in a little bit of gray, just so you can see the subset. Obviously, we closed right here. It was a green candle on the close the previous day, and this was the 30th of June, and you can see the volume was substantially high. Closing volume, market on close orders as they come in. The opening bar, we gap lower. We had a wick, and the wick went all the way up to the supply demand zone, highlighted by the big yellow arrow, and you can see the white line, the green buy trigger, the over under, the red sell trigger. So the supply and demand, demand at the bottom, supply at the top. That was the top wick of the day on high volume. From there, we clearly failed sell target 1. We drove down to S2 and sell target 2, and this is all in the first 5 minutes, guys. So you have to be prepared, but we know it from a trend down day because one, we're gapping lower. So we gap lower. We don't get into the supply demand zone. We move lower. Here we moved all the way to S4 in the first 10 minutes, and then we have a reversal, a retracement where the market moves back up. It's usually 50 to 61.8 if you're a fib person. It moved back up into the midpoint of the opening range from 9 until 10 a.m. And at this point, it's at 149.65. And we're driving now, looking to see if it's going to continue moving higher to get back up into a range, or if it's going to fall back. And typical of trend down days, we reverse back lower and we finish the AM range. We put in a new low at after 10:30. Which is right here, and by this time, guys, we've already taken out sell target 4. I know a lot of people that traded NVIDIA yesterday to the downside and made tens or hundreds of thousands of dollars. And so this is typical of what a range day is. We gap down, we spike down, we have a top wick, we move lower, we retrace, and then we move lower, putting in new lows, we retrace, we move lower and putting in new lows. Here we've got a new low, and I highlight it with a little yellow vertical line, a new low after 12 o'clock. Again, typically in our system, we're looking for a breach of S2 to potentially declare range trend day rules, be it R2 to the upside or S2 to the downside. And so we're at S4. We move higher. We put in a new low after 1 o'clock. We're all the way down at sell target 5. I think the only part of the AM/PM system that did not come to fruition is we did not see a new low in power hour, the final hour of the day. But again, when you're all the way down at sell target 5, that's typical. So trend down day, we'd gap lower, we'd retrace, we'd put in a new low in the morning session before 11 a.m. We'd put in a new low after 12 o'clock. Somewhat of a creep is often occurred during lunch, during the lunchtime session. Again, here's new low at 1 o'clock, and then we creep lateral. We've got another new low just after 2 o'clock, and then we tailed off and just kind of went flat. This is where sellers were exhausted. There weren't necessarily buyers here. There just wasn't a repeat of selling, and this was yesterday afternoon. So we closed the first day of July on a trend down day for NVIDIA. It breached the PVI volatility, so we might be looking for a mean reversion play back to the upside on Tuesday or Wednesday of this next week. You can see that we did close a lower price right at S5 on pretty decent volume. Okay, so left chart, trend down day. Then we move over to the right. I think this is Wednesday, the QQQs. I'm just trying to do different charts. You'll see first thing I highlight is the day before. We always want to find out where the supply and demand zones are. Why? We want to find out if we've got anytime there's a gap in the supply and demand zone, that's a tell for you. Our members know that, and we're working to teach this concept so that the supply demand zone is just it's an incredible trading tool to help you be not only on the right side of the market, trade with a trend, excuse me, but can allow you what to expect. Very similar to NVIDIA, we're much lower the previous day below the supply and demand zone. So we know it's not necessarily a gap lower. We just know we're down from Tuesday. Here's the closing bar and the closing print. Again, on high volume, market on close was big to the downside for QQQ on Tuesday. Roll over to the 29th. We sort of gap down, not really, but we spiked down hard the first 5 minutes. Again, if you're leaning, your bias should be leaning to the short side because supply demand is way up here. Supply demand is opening up way down here to the downside, so we should have a bearish posture of the day, certainly for the opening range, the first 30 minutes. Again, opening bar, we've got a wick up. We cross over by sell target or the sell trigger. We're looking for demand S1, and we hit the sell target. Your trade is almost done in the first 5 minutes of the day, right here, on good volume, high volume, highest volume for the day. Highest volume bar for the day, but we failed to breach the sell target. So again, expecting some of the same thing. We don't get below the sell target 1 down here. We don't really get a close below this. This is a 5-minute chart. We do get wicks. That's what we call look and fail. And then after 15 minutes, 9:45, after 15 minutes, we move back up into the supply demand zone. Anytime we're in the white zone, supply and demand, the mindset is that range day rules apply. And how do range day rules apply? We want to take the extreme. We want to take the outer limits of the range back to the middle. The over under is the blue line. It's right in the middle of the buy trigger and the sell trigger. And so we're taking long trades here, taking half off, maybe 3/4 off here, and might leave a runner on here. If we get back up to the top end of the range, which you can see we put in a top here, and then we move back to the over under. At this point in the day, we're less than an hour into the market, and we're already thinking, wow, we've got range day. One, we failed to make a low below the sell target 1. Again, we're typically looking for S2 to expect a continuation to the downside, i.e. a trend down day like we just showed with NVIDIA. And it's moving back to the middle. Not only is it moving back to the middle, you can see that we've got a lot less wicks. Candle bodies are right in the middle. We're straddling the buy trigger. We're straddling the over under. We're straddling the sell trigger. And we're doing so on lower volume. And so when you get this, you don't have a strong conviction either way. And you have what we call balance, where you've got an excess supply of sellers up here and an excess supply of buyers down here. And so the imbalance wants to work to where we're going to range and then trend and then range and then trend and then range. And it's really, really tight on this day because of, again, when you have range day rules, you tend to have algorithms that are working against each other. They're competing, and it keeps the price action somewhat muted on the day. These are excellent days for you to go and sell theta. Okay, again, trend down day or trend up day, we'd recommend early in the morning placing selling credit above R2 and selling credit below S2. You're going to get the most credit here because of the open to the downside and not sure whether or not the sell target one's going to hold. As you can see throughout the day, we came down one time. We had a close below. We only had one close below demand after 10 a.m. And it was right here. Next 5-minute bar was back up into it. The wick was still into it. We would be looking for a full bar, open, high, low, close, below supply, below the demand S1 level. And if we got that open, high, low, close, a full bar below it, then we'd expect sell target 1 and possibly a continuation to the downside. We didn't get that this day, so it was pretty easy for us to sell premium, expecting us to stay in the range, not taking any excessive trade, be it long calls or long puts, or trading futures to the upside or the downside. This just let us know that all trades were scalp trades for the day. We were not expecting a continuation run, and that's pretty textbook of how range day rules apply and what to expect. And when you put range day and trend day rules together and you put them with the supply and demand levels that we provide, it becomes really powerful. So that's all I got for today, this morning. Hope everybody has a great 4th of July holiday and weekend. Be safe, have fun. God bless America.